Hello and welcome to the macro of it for the week beginning the 11th of September 2017. What a week last week was, and as I reviewed on Friday, it was a huge day in terms of what happened in macro policy. It was a huge week in terms of what happened in central banks, and this week's none the difference. The big one this week is the Bank of England, and that is a very interesting scenario considering that Brexit hasn't been as much of a weight on their economy as some has forecasted, and therefore Mark Carney might move it. Be honest with you though, the Bank of England is not really that interesting for us, so let's ignore it for now. What will be interesting is on Thursday we do have our employment numbers, and there is still growing signs inside the economics that we get from smaller places like ANZ and also from NAB in their actual releases, individual releases, that things are still sort of very much different between business and consumer. So let's have a look at what's likely to come on the employment side. Again, it's a hugely volatile number, that employment change that sort of flip-flops between 20,000 ads, 20,000 lost, etc. Look through it, look at the actual trend number, and then look at the unemployment from a 12-month basis, not just on the month. Again, things are reasonably good on the headlines, but if you look through them, they're pretty anemic. And that's the other thing about this, is that you look at the hours done, the wage growth, the participation rate, they're really welded to just basically levels that are just above record lows. If you look at participation, it's around about 64%. If you look at the hours done, they're sitting about 37 hours per week. And if you look at the wage growth, as we all know, it's pretty anemic. So they're always numbers to look at because there's two sides to those employment numbers. So headline might be really strong, and I expect it to be so. You've seen that CapEx is expanding. You've seen businesses quite confident. So expect to see actual jobs added, and that will mean it will improve probably in 6 months' time. But right now, it's just not eventuating. And then again, you've got to look at the point of view that does that filter into inflation? Probably not, or at least not yet. That also therefore brings me to things like job ads from ANZ. You also look at the NAB business confidence that are coming out as well. They're also, again, showing exactly what we've talked about many, many times over the last couple of months, which is that the difference, in fact, the gap that's there is just continuing to basically expand. We did see finally a bit of a tick around on the consumption side to business profits. But in the main, if you look at business confidence and where it's sitting and where consumer confidence is sitting, it's just complete opposite. Consumers are very pessimistic, business is very optimistic. So the question becomes, how do you gap that together? How do you actually group it up? And this is the big question. I think government is trying to sort of get involved in terms of how you look at it. They want to actually start closing that up. So that means, therefore, that wages are going to be the interesting question, and that's why the employment on Thursday is so important. So what a week, what an interesting week. I don't expect anything majorly new coming out, but that debate is going to be raging on for at least the next 6 months. And if you can't see a closing between confidence in business and confidence in the consumer, then all of this current optimism will evaporate, because in the end, consumption is a major part of our GDP. And if we're not growing, nor's the economy.
Did you know that your membership gives you access to our analyst Q&A section? Every week, our Intelligent Investor analyst team answer members' questions on investing in ASX-listed companies. If you would like an analyst's opinion on your investment queries, go to the Q&A section of any of our websites to read or ask a question.